Good morning. This is the video newsletter for Buy Sell Short for Sunday, August 21st. This is going to be a really short video because there's not a whole lot to say. We are in no man's land on the market right now. We could go either way. We could get more bad news from Europe, which is what essentially slammed us down this past week, or we could get good news and rally nicely. It's just, a coin flip at this stage, and the economic data, the political rhetoric that is swirling around still in DC. It's just, who knows what's going to happen out there. This is an important week. Actually, let's flip over to the Dow daily chart. Um, this week, I believe it's Friday, we have the Jackson Hole meeting with the Fed. And if you will recall, this time last year, this is exactly where the market bottomed. We had a huge sell off in July into August. We had the Jackson Hole meeting and talk from the Fed about QE2. And then we went on that essentially 50% rally over the next year. Here we are again. European crisis has taken stocks down to the most oversold levels we've seen since the March 2009 low. Actually, I believe we've had a longer losing streak now than we did during that period back then in March, which in itself is saying something. We've had a lot of news coming out, continued worries about the European banks, and just to tell you how bad it has gotten this week, I believe it was on Friday, the valuation of the 32 largest banks in Europe is now smaller than the valuation of Apple. I don't know if that tells us that we should short Apple and go long European banks, but that just tells you how bad things have gotten over in Europe, and that continues to crimp everything. We've had the economic data come out over the last few days, just awful. Companies coming out and just giving terrible guidance, and the common denominator and all of that other than Europe has been the debt crisis, manufactured crisis that we had in July and August that essentially scared the crap out of US businesses. And, companies stopped placing orders, and now here we are threatening to double dip again. And, it's one of those self fulfilling prophecies. You hear it enough time on the news with the doomsayers, and, people start to believe it. Fed does not want this to happen. I'm thinking we are going to see some sort of QE3 announcement come from the Fed. It's not going to be the same as before, but you recall, the liquidity report M2 money supply this past week increased another 40 plus billion dollars. So over the last 4 weeks, the liquidity M2 money supply has gone up $250 billion in 4 weeks. Just to give you an idea, we said it before, the entire increase in 2010 was 260 billion. Entire increase in 2009 was about 260 billion. And over the last 4 weeks, we've seen 1 year's worth of liquidity increase. So the Fed, probably you could call it a quasi QE3, but we're going to be looking very closely at what they say this week. If we check out the VIX, no real surprise. We had another big spike in this one, and we still could see further upside. Just looking at the indicators, a nice spike into the 50s going into the Jackson Hole meeting could set the stage for a nice fall rally, and that is what we're looking at right now. We continue to sit on high cash, 90% minimum cash. For you new guys, rookie traders, 100% nightly is probably the best place to be right now. And then, look what we did. We sat on cash for a couple of weeks during that market sell-off after the debt ceiling crisis, and then we had a 1 week fat little rally. We had multiple 20, 50% runners. So it only takes a few days to make money in this market monthly if you are cautious. And this is a market to be extremely cautious, in my opinion. Just looking at the Russell 2K chart, check out the just absolute decimation in this over the last month. We were at 860 when the debt ceiling crap started back there in early July. Here we are, 220 points lower, 24% drop in the Russell. Small caps, we've got downside, probably another 7 to 10% is possible here in small caps, which is fantastic. Do you remember the gains we had during this run back from September to December last year. Just think about that as you're moping about this market right now. Market sell offs like this breed opportunity. It's just a matter of sitting back and seeing what happens. Now, if we don't get any bombs out of Europe over tonight or in the Asian markets, we're probably looking at an up move in the market tomorrow. And the reason I say that, we had a lot of traders. We had that big sell off late Friday, but a lot of that was we had options expiration. The market actually held up pretty well on Friday, but there was no way traders were going to stay long over the weekend just based on what's happened the last couple of times we've seen that. And the fact, or if we get no bombs in the overseas markets tonight, we'll probably see some sort of relief rally, maybe 150 plus point move on Monday is possible unless we get, some bombs. Selling is getting washed out. Sellers are getting washed out. But again, if we look at the chart here, 2-year chart on the Dow, if we do break that 10,600 level, we're looking at seeing 10K. And that is really a level where I would probably start saying, you know what, I'm going to take a 2 to 3 month time frame on my positions and start buying some stocks. And probably the first area I'd start to move in would be these patent-rich stocks like PRKR, OPWV, etc., etc. Now, going into this week, the stocks we are going to continue to look at, and as I've mentioned a few times in the chat room, go to the trade alert section on the website, and I have posted the list that we posted 2 weeks ago of potential rally plays. Those stocks are still in effect. They led nicely during that 1 week rally we had, and they will do the same again. So those are the stocks that we're going to be focused on. Stocks like HILL, Sirius, SIRI, all those big runners that we had a week ago on watch. These are the first group of plays we're going to be looking to play on any sort of market bounce. Sirius, we've got no stocks really to watch other than what we look for on the open in a market like this are big gap down opens for quick reversals. And one of those stocks that is fantastic and has been fantastic almost daily since this market sell off began, Sirius, especially when we get a 7 to 10 cent drop on this stock on the open. Almost always, nothing is a certainty in this market, but 9 out of 10 times it gives a very nice bounce. We got some nice bounces on this one on Friday. I think we picked up a 6% intraday pop on this one on Friday. So this is a stock definitely to keep an eye on, especially if we see gap downs in the market. Now, gold, that was pretty much our signal. You remember when we had that rally last week, the one thing I kept saying, and it was the reason why we maintained our 90% plus cash stance overnight, was that we really didn't see a big sell-off on gold. And that is probably what we're waiting, as a confirmation on this market, is a big sell-off in gold. The only stock showing up on the pop scan, which is amazing to me, MDW. Breakout here, 240. You could possibly get a move to 260, 10 to 20 cent plus upside. The indicators are pretty good. Now, one thing to keep in mind, gold stocks have not been doing that great. I mean, part of the reason is when traders are scared, they will buy gold, but they won't buy stocks, which means they won't really rush into gold stocks. And the volume, you would expect the volume to be massive on gold stocks like this, but it hasn't been because there's a high level of fear just owning stocks out there. So, I really don't like gold stocks, but, this one could be one if you entered 240 break, 10 cent stops, 10 to 20 plus cents upside if you're looking for some gold exposure this week. So, holding pattern going into tomorrow. Let's see what happens. All eyes are going to be on what Bernanke says this week at the Jackson Hole meeting. Remember, we're not really interested in timing bottoms. We are traders. If there is no decent risk-reward trades out there, we sit on our hands. This market is not going to last like this forever. Look at that nice 1 week rally we had, and we really only started participating in that rally 2 to 3 days into it, and we got fat gains. So don't be concerned about missing the initial bottom. There's a lot of risk out there. We can trade the intraday moves, and when the time is right, we'll start swinging longer. So look at this market sell-off as an opportunity for down the road. There are going to be some actually, Where is that chart? There are going to be some massive trades, just like there was this time last year into year end. We're looking at this scenario again, so be patient, guys. And that's it for the video. Any questions? Feel free to send me an email. Otherwise, I'll see you guys in the chat room tomorrow. Good night or good day.